Hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we break down notable moves across financial markets in 20 minutes or less. We're going to jump right into it here. Hope you're doing well out there. Now, it is Jobs Week Friday. Typically, we would lead with the jobs report, but we had a slightly bigger story. Thursday, an eruption between social media giant Elon Musk and President Trump facing off in basically a battle royale. I think lots of folks kind of predicted this would be, this relationship would have to terminate like this at some point. Maybe not as soon as we did get, but here we go. I've got a chart of Tesla up since President Trump won the election here, and you can see that bulls basically were rewarded with an immediate, 73% rally as Elon was seen as sort of President Trump's right-hand man, helping him get elected and getting a nice position there in the White House. And then we saw the rough reality correction here, down 55%, sideways slog. Recovery started to look pretty good as Elon Musk steps away and starts to distance himself from politics, and then he comes full circle, coming and swinging just about as hard back into politics as one could imagine. And we saw a huge slide on Thursday. Tesla shareholders roller coaster ride here since the election. Basically, after all is said and done, though, and this is why I put the chart on, we're essentially back to flat from the election. So essentially Tesla shareholders flat since November. Now, of course, there's opportunity cost there because other stocks have gone up a lot, but really the market hasn't gone up a tremendous amount since November. So that's something to think about. Now, if we look at our second big catalyst this week, this was the jobs report. So the May jobs data came in, 139,000 jobs added. That was slightly better than expectations, with the unemployment rate held at 4.2%. This is a 5-year chart of the unemployment rate. We had that huge spike up immediately post-COVID, and basically we kind of normalized down around this 4% range, and we've been hovering here for quite a while. So the market kind of enjoying a little bit of a maybe better than expected jobs report. Maybe they were bracing for some uglier data, but those were sort of the front two catalysts on deck. If we take a look at market performance here, you can see again a nice green week across the board here. Russell 2000 small caps were the standout leaders here, up 3.3%, but everything else putting in a pretty good showing here as well. Now, before we continue, I'll make a quick pit stop. This video is sponsored by our friends at Investors Business Daily. Market Surge, that is the product, that is the platform. I use it every single day, basically to start my analysis research on companies. So check it out. We've got a referral link, discount link for first-time users. I've also got a tutorial on the YouTube channel to show you how to get a little bit more out of those scanning and trade ideas. So check that out once you sign up as well. Now, thank you IBD for sponsoring the show. Let's move on here with volatility. So VIX here this week continuing to come down. So 18.36 starting the week up here on the top left. We moved down on Tuesday, Wednesday. We had that spike up on Thursday. Thursday was a little bit of a wobble here on just generally momentum type names, maybe Tesla related, maybe some funds getting hit across the board, taking down exposure as Tesla volatility really started to increase. But all was saved and good. By Friday, we were back down, VIX at 16.77 going into the weekend here. And this is what the VIX looks like over the past 3 months on the right-hand side. We had that big spike up in March, April, and now we've just been sliding back to pretty comfy, complacent levels. If we take a look at the US dollar this week, we did firm up. We started the week down around 98.71. You can see on the right-hand side, we're trying to carve out a little bit of a base here, some stabilization. I mean, the dollar got really hammered in March, and so we're finally starting to kind of catch our footing a little bit, but sellers are definitely still in control here on the longer term trends. Last but not least is the 10-year Treasury yield. That was inching higher this week. So we are now back over 4.5%. And so that is something I think is going to be focus here. We talk about it a lot. Lots of people have got their eyes on it for good reason, because it is an important sort of discounting rate to what we are getting as stock market investors. The chart on the right has a little bit of a data issue, so apologies on that. Let's keep moving here with sectors. So again, a good showing this week across the board for the indexes. That same goes for the sectors. Technology, energy, and communication services were the top three leaders this week. On the downside, it was consumer staples and utilities were down about 1% this week. So it was a classic kind of risk on, reach for risk and beta. And that certainly shows in our sector heat map. Here's our momentum rating signals here. So again, you can see pretty much a glass half full market, right? I mean, there's no red, there's no bearish, there's no big warning signs here. Life is good right now for stock market bulls. It continues to be. There's a bid in this market. The trend is up, and swing traders, position traders, trend followers, long holders continue to get rewarded here. We're going to look at the price action in just a little bit when we get into TC2000 later in this video. 52-week highs and lows, you can see, continue to favor the bulls. So we're getting high double-digit readings here all this week. We haven't really broken into the 100-plus readings, which I would love to see. That's on this left-hand chart. Love to see 100-plus stocks hitting 52-week highs, looking for breadth to expand, looking for more support under the market. But hopefully, slowly but surely, we will get there. Percentage of stocks above a 20 SMA resetting from some pretty frothy levels. So that's a good thing to see. Despite the fact that markets continued up, indexes continued up, underneath the hood, we actually saw some stocks, resetting from those early May, nosebleed 80% plus levels. So that's pretty good to see. Put to call ratio kind of chopping around in the middle. Not too much to say about that. Bitcoin here been a little bit volatile, but had a nice recovery on Friday. This week was choppy, kind of sideways. Thursday, we had a little bit of, again, that momentum wobble. We saw that in a lot of leadership and higher beta names. Think Palantir, think CrowdStrike, think Tesla, of course. Bitcoin was in that same kind of group, getting sold off on Thursday, but now kind of making a little bit of a V-shaped recovery here on Friday. I still think that 106K area is an important level to keep on the back of your, written down on a notepad, and we'll see if we can get some follow through higher next week. A couple of other standouts this week. So international stocks, I know it's a little not too sexy, but international stocks continue to really just outperform this year on lots of different levels. You can go country by country to get more granular, but the ACWX, which is international stocks minus United States, made new highs here, all-time highs or 10-year highs. I mean, it's a pretty good record there. So a nice run continues. Silver also a very nice run here, breaking out of multi-year levels. We can look at this chart a little bit closer in TC2000 in just a moment. Last but not least, gold miners. They did pull back here towards the end of the week, but they staged a nice impressive breakout at the start of the week, and then they kind of floundered a little bit and retraced. But generally speaking, trend is still up here. Still like gold miners. Have a position here in GDX myself, and gold have had a position in all this year. So those trends are still things we like and continue to work. Upcoming econ events for next week. It's definitely a lighter on than we had this week. We do have CPI on Wednesday, and then we have some initial jobless claims on Thursday. So, and then some consumer sentiment data coming out Friday. So a couple of things on the radar, but kind of a lighter week next week. Last but not least, I want to preview this. We're going to look at some of these stocks here before we get into TC2000. This is what we're calling our best ideas trade report. These are sort of algorithmically curated stocks that are fast movers by definition, higher beta names, momentum type names that are leading the market, that are actionable, that are in a good sort of swing trading or trend following or position trading sort of longer multi-day to multi-week hold, right? So we are curating this list, updating this list every single day. we are providing back-tested results on the success rate. You can see the win rate on the columns here, win to loss ratio. I'm not going to go too much into it now. I'll do a separate video that maybe explains what the heck all of this actually means and how to use it, or leverage it. But for now, we're going to look at some of these stocks here today. Going to continue to build this out, like I've been saying. Work in progress, right? My little 3-month-old is making it difficult to get good stretches of coding done, but making progress, chipping away. Probably have more stuff on the website and an accessible list available soon. So we're going to jump into TC2000 here. We're going to look at some of these stocks, some of those market stocks. Okay, let's look at some price action levels here for the S&P 500. So we, like we talked about at the start, I mean, bulls are in control, trends are up, life is good. That's kind of been the case now. We've had some digestion. The S&P 500 is kind of breaking out. Switch over to the cash settled market. And you can see that, we're still just a couple of percent from all-time highs. We talked about that being kind of the target for the next upside move, provided we break over this little 2-week range. And it seems like we are in the process of making our ascent to the prior all-time highs around 61.30 in the S&P 500. Thursday was a nice, kind of classic rug pull or panic day. This kind of flipped, I think, a lot of folks on that were perhaps on the momentum trade, that were riding the kind of the breakout to the move to the upside. And maybe it was, again, the kind of Tesla drama, the momentum names getting hit a little bit of a wobble out there ahead of a jobs report, and just taking risk off the table, generally speaking. And then the jobs report came out better than expected, and risk was back on, and now it's chase mode when we gapped up and then proceeded to close at the week's highs. So the S&P 500, again, it's not without risk. There is clearly, the potential for this market to turn south, but right now, all of those attempts to turn south are getting quickly kind of gobbled back up, and we are just grinding up. So S&P 500 trend is up and intact. Feels like we are on our way back up towards those highs. Qs, same situation here. Thursday was a bearish engulfing day, heavy volume, no follow through, very tight range for the NASDAQ 100 here on Friday though, right? So this is still a little TBD, a little ominous looking here going into the week end, but this could break in either direction. So let's just keep our eyes out. If we take out Thursday's lows in the S&P 500 or the Qs, then you've got a little bit of traction on the short-term kind of bearish or short-term risk management signals to work with. But until and if we get a follow-through day to the downside and we start breaking, some previous lows and some actual technical levels, then you got to give the credit to the buyers right now until there's more evidence stacking in the other direction. So again, we don't want to be complacent, but we do want to recognize that the trends are up, and we don't want to fight too hard when that's the case, right? That's at least my disposition on this. The Russell 2000, we haven't been talking about it because it hasn't looked interesting. It's starting to look pretty interesting here, right? You had this, again, just this V-shaped down and then back up. You've got a nice base here. I mean, you've got this potential kind of, again, I'm not a chart pattern person, so this might not be, the true spec, so to speak, but you still have this nice kind of little inverted bottoming pattern here that you could look at. And it seems like Friday was day one kind of breakout to the upside with some type of measured move to take us up to 230s back up here. Again, that would be nice to see small caps starting to take the leadership reign again. That would help breadth start to improve, and that would help kind of rotation across the board. So things looking good right now. It can, turn south quick. So again, we don't want to be complacent, but that's kind of the technical read there on some of the short-term price action. We talked about gold, right? Well, we didn't talk about gold as so much as we talked about gold miners. So this is the gold miners chart. It feels to me like we want to get back up here and test those 2011 all-time highs. It's been a long time, but the technicals look good. Granted, this weekly bar doesn't look so hot, but again, let's see if we get confirmation. The longer-term trends are higher here, so I don't want to bet against that. Short-term volatility should be expected, but long-term trends, I think, will prevail. So gold gold miners, silver breaking out here, looking pretty strong, looking nice, heavy volume, looks like pretty actionable. And same thing with the oil. So oil here actually showing some signs of life. It's been very tough for oil bulls this year, but they are getting their act together. They are starting to move up, and we are starting to put in, you know, what looks like a reasonable short-term kind of bottoming pattern there for oil as well. Last but not least, I want to talk about XLI. This is the industrials ETF here. Take a look at this, closing at all-time highs. This is XLI. Don't talk too much about it, but looks pretty, well, again, not the most convincing Friday session here with a complete doji, but it is breaking out, right? Kind of breaking out and then suddenly standing still. So let's see if we get follow through up, but the relative strength here, all-time highs. I mean, you have to give some credit here to the industrial bulls. So that, I think, covers all the major sectors there. Let's look at some of our best ideas list. All right. So we've got, at the time of recording this, 54 names, I believe, on our list right now. And so this is kind of my shopping list for momentum, some breakout names, anything I want to swing trade to the long side. If I like the market environment, I'm going to this list. I'm looking at the names that our quant systems are deriving, and then I'm going to overlay what I like to see, right, as a human discretionary trader. That's the way I'm using this list. That's the way I'm thinking of using this list. So out of the 50 names, there's 5 names to me that look interesting for Monday, right? So let's run through them. So Rocket Lab is the first one, RKLB. I like the setup here. I like the volume coming in here on Friday. Again, this is a very volatile name, so just know what you're owning and understand the position size. But you can see just a beautiful uptrend up and to the right. We've got a nice push up, some digestion, big volume up. This looks good to me. Again, this is a name that's been on the list for some time, so it's not a new candidate. If I can see in real time, this name has been on the best ideas lists for, wow, that's a long time, 43 days. Still working out the kinks. I want to make sure that this is correct. But it looks like it's been on the list for 43 days. So it's been, you know, working nicely. Next one is Delta Airlines. So again, not necessarily a super high beta tech type name, but it's still a name that moves quite a bit and has some nice returns once it gets going. I like this, right? I like the setup here. Again, nice move up, digestion, and starting to break back out. Look for follow through there. QBTS, so quantum stocks, they've been hot, big volume pulling in. Again, nice digestion coming in, kind of day one lifting up, uptick in volume. Look for follow through there. SMR, nuclear play here, cleared to all-time highs, digested a little bit, big volume, day one moving up. Last but not least is GE Vernova. More of just a steady grinder here. Broke out to all-time highs a couple weeks ago and just continued to grind. Finally cooled off a little bit, so I would just look at this one as well. I don't believe I have positions in any of those at this time that I need to disclose, but those would be my tight shopping list for Monday. All right, so I'm going to talk more about that best ideas list. For now, those are some actionable names. That's the rundown on the market right now. Quiet week up ahead, at least it seems. So let's see if we can get some continuation in these trends. And that's what I've got. So thanks as always for tuning in. Hope this video was helpful. If you like it, do like the video, and don't forget to subscribe. And we publish every single weekend on Fridays, and we got links and goodies in the description of this video. Take care. We'll see you next week.